Good evening, everyone. I'm just about to start. I want to launch the Instagram Live and get started. Yeah, so welcome to Crypto Pulse Weekly. Uh, here to everyone. What happened? My God, just hold on a second. Just want to be sure that I'm sharing the rights. Yeah, it was a bit spoofed. I thought I was sharing the wrong version. That's okay. The right version that I'm sharing is just I left the date unchanged on that one. So good evening, everyone. Happy New Year. Welcome to Crypto Pulse Weekly. This is the first in the series of Crypto Pulse Weekly for the year. And as you can see, I've titled it Surfing the Bull Runs, the Bull Run Blues. Yeah, a lot of people have been calling and messaging me asking, Dr. David, what's going on? Are we in the bear markets? Uh, I was just having a joke with Dr. Adere, and it was like, as far as it's concerned, we started bear markets since May last year. Um, for starters, I would say, well, we've not really concluded on this bull market. What I think has happened is the much anticipated institutional interest and investments that we've been talking about has really happened in 2021. As a result of that, cash positions have changed. So the control of the market is not really what it used to be like before. Now the control of the market largely starts with the exchanges and with whales. But in the last 18 months, we've seen exchanges like FTX in the United States that provide an opportunity for institutions to really, scale in heavy on the market. And FTX is an institution-heavy exchange in the US. What this means is that apart from the ETF futures on Bitcoin and other instruments like the Chicago Mercantile Exchange, institutions now have very big on-ramps weighing on the market. And I will show you today how that is panning out of the price of Bitcoin, because what it then means is Bitcoin price is getting dragged like a rag doll, just like the same way Bitcoin drags the price of altcoins. Bitcoin itself is now getting dragged by S&P 500 and the markets. So what that means is that for some time to come, we're likely to see these peaks and troughs um, till we eventually get to a particular peak where everybody just feels that yes, we've had enough of this bull run, and we're going to see the remaining time out. Technically speaking, the next halving is supposed to take place in 2024, which is about, yeah, it's less than 500 days from where we are, if you're counting days. But everybody agrees, or well, most people agree that we have not seen the characteristic blow off top that you will see in a Bitcoin uh, bull run conclusion. As a result of that, even though we're having these corrections, and dips and bear markets, as some people have called it, we've still not, exhausted the gas that we have in this bull run. So for people that are wondering, oh, okay, Bitcoin going to zero, Bitcoin never zero. It hasn't gone to zero in the last 13 years. So uh, yeah, Bitcoin is now a teenager, as they say. It's now 13 years since it started running. not going to zero ever. So it's not likely to go to zero. There are some metrics that have not changed in terms of production, and there's some metrics that have changed in terms of market price. And I think I'll talk a bit, if I remember, I'll talk briefly about on crypto drip date, which is production costs, cost price, and market price. And the reason why I want to talk about these three is because sometimes when you're an analyst and you're looking at both technical and fundamental analysis, it's always important to get an holistic picture of what is happening and what is driving the prices. So if you know what's happening really on ground and what's driving the prices, it gives you an idea, a good idea of how to gauge the markets. So when I say that, well, pretty much in another deep correction that has blocked off, if you will, blocked off a potential blow-off top that could have had in November, extending the bull run essentially, because as I said last year, the Ways do not want people to lose interest in Bitcoin or crypto, because then people will not be investing. At the same time, they want an opportunity to cash out. An opportunity to cash out only comes when you have new entrants and the price is really, really euphoric. When the price is euphoric, then people are going to get in and everybody wants to FOMO in, and you have all sorts of new participants in the market. So because of that, we still expect that we have quite a long way to go. So as usual, we'll go through our market updates, talk about the vital signs, and then we'll take the crypto drip. So in terms of market updates, even though we started the year at 6,000, and I did mention then that it was important to note which price we ended the year at and which price we started with, because very often the ceiling, the floor price is not usually far, and especially in terms of Bitcoin, the floor price is not usually far from that entry price. So what we've seen right now is we've dropped almost, give or take, almost 15% from the entry price for this year. So two things you need to keep in mind. That means we are 15% below the entry price for the year. The entry price for the year, or is the open price for the year, the price at which Bitcoin opened. Bearing in mind that we're still in a bull run, this is actually very critical and is worthy of knowing, because the open price for the year means, as I said, either the floor or very close to the floor. So usually if you get to the floor of the house, the only place you can go is on the ground. And if you go on the ground, then you know that you are substructure and you are below the structure of the house itself. So note that whatever prices we have, especially in this month, below 46K is below the ground. Secondly, the fresh dump that we had, especially in the last 3 days or 2 days, is on the back of three things. One, the S&P misbehaving. Of course, the S&P has been going crazy things before Christmas, but what I notice now is that when S&P is coming down, Bitcoin is coming down. When S&P is going up, Bitcoin is ranging, not really going up. So the drag down, or the vertical drag, the downward vertical drag of S&P is literally taking out the price of Bitcoin. So that tells me that there is a lot of cross betting or hedging taking place, meaning institutions are using Bitcoin to hedge the equities markets and vice versa. So we had that drawdown on S&P, and the S&P drawdown was on the back of a news that we already know. So think about it. We already know that the Federal Reserve Bank of the United States is thinking about cutting or hiking interest rates at the end of Q1. So we already knew that. But again, somebody brought out the news again and blew it out that Fed has confirmed that they're hiking it. We already knew that they said they would look to hike rates at the end of Q1. So confirming it really, it's not really something we don't know out of the blues. The only thing that I can say that was an opportunity to trigger, the market was the Kazakhstan miner outage. been following the international news, you notice that there's been riots, persistent riots in Kazakhstan, and I think it's even cost the government there to resign now because it was really bloody and there was a shoot to kill order and all sort of very nasty uprising. As a result of that, the government shut down the power grid and shut down the internet essentially. So the shutting down of the power grid, of course, affected the miners. For the record, Kazakhstan has the largest pool of miners after China and US. Kazakhstan has the largest pool of Bitcoin miners in the world. So that has dropped the hash rate by like 13% thereabouts. So usually when the hash rate drops, the market behaves irrationally. What do I mean that market behaves irrationally? When the hash rate drops, people just assume that that means Bitcoin is in trouble, as it were, and then there's a sell-off. On the other hand, some newer institutional investors who are not really versed in what's going on think that a drop in hash rate is actually a bad thing. But what they don't understand is that the algorithm within the Bitcoin blockchain network is such that if the number of miners suddenly reduces by half today, let's say out of the 11,000 plus Bitcoin nodes that are in the world, if it suddenly reduces by half in terms of hash rate or mining power, within 24 hours, the network will adjust its difficulty, meaning how difficult it is to produce one Bitcoin. It will adjust its difficulty to reflect the number of active nodes. If the number of nodes increase again, it readjusts the difficulty again to reflect the number of active nodes that come on board. So even though, like we had last year when the China ban happened, that we had a 20-something drop percentage in hash rate, even though the hash rate dropped significantly, it never affected the network. The block mining was still happening at every 10 minutes. The only difference was that it was becoming more difficult for miners to get it became easier for them after the China exodus. But again, within 6 weeks, we found out that many of those miners, most of them moved to Kazakhstan, the others to US, and some others to places like Russia and Siberia and Estonia. So really, in the real sense of it, a drop in hash rate is not a bad thing, really, for Bitcoin. But institutions are always looking for sensational news to, hook the markets. And for newbies, people who don't understand what's going on, they also force them to drop their bags, quote unquote. So people sell their Bitcoin to market weakness, usually at a loss, because they're afraid that Bitcoin is going to go to zero. Like I was telling Dr. Larry before I started this call, I was saying that people need to understand that one, Bitcoin is not a perishable asset. And I think it will take some time before people actually realize that Bitcoin is not really digital gold. It's more of digital real estate, but it is not there yet because it's still competing with the market capitalization of. When Bitcoin eventually flips the market capitalization of, that is when people will realize that actually this thing is like digital prime real estate that you can afford to keep and will preserve value year on year. So I'll come back to Bitcoin, but let's talk about regulations and sentiments. We're very bearish right now because people are thinking that 45K was going to hold. 45K has not held, tapping on 40K now. Everybody's saying, okay, we should expect 35K. It's anybody's guess, to be honest, because at this point, I expected that we're going to get a strong bounce out of 40K or 40K when we tap 40K earlier hours of today, but that bounce was not there. And because of this constellation of negative news, there's sort of buyer apathy on the markets. There's still a lot of institutional funds on the market, and I think that the heavy institutional funds are already buying as we speak. I am of the opinion that they've started buying right now, which is at 40K. They'll probably continue buying till we get to probably 35 or upper 30s, and the market decides to flip. My opinion, I'll hold my opinion actually. Let me hold my opinion. I'll talk about that later. But between now and the end of the month, we expect that we'll have at least one relief rally. And I think that we're going to have a fairly significant pump before that Fed tapering in March, because everybody knows there's going to be Fed tapering. It doesn't pay the market makers to start dumping now, because then people are not going to be able to FOMO in. But the ideal playbook will be for them to pump the market at the end of January to insane heights, get some people to get into it, and then start offloading before the end of. That's personally what I'm watching out for in terms of play out of the markets. In terms of overall regulation, I've already told you about Kazakhstan. I think that they'll probably come back online once either the government defeats the people protesting, or the government resigns. I think one party will eventually win. Estonia has been actually called for many crypto companies. I understand they're trying to cash in, and they're trying to tighten crypto regulation. Regulation at this time. I hope that pans out well for them. I saw a news just before coming on. There's the UK lawmakers forming crypto advocacy group, and I smiled because what it tells me is that our MPs are our MPs are bag holders too. So on a general level, there's a lot of fear in the market right now, and I'll repeat what Warren Buffett says, that when people are fearful, that is when you should be greedy, and that when people are greedy, that is why you should be afraid. And somebody said, be greedy when there's blood, even if when there's blood on the streets, even if the blood is your blood. It sounds crazy, right? That statement sounds crazy, but that's the strength of exceptional investors, being able to overrule your emotion and apply logic to the behavior of the markets. So many markets are ruled by not ruled by market sentiments. They are ruled by market makers who are able to influence market sentiment by basic rules. There are basic rules for supply and distribution of prices. Those rules evoke certain emotions in us. It's almost like the psychology of colors. There are certain colors that evoke certain emotions just by you seeing them. It's a proven psychological fact, by the way. If you go to a US court, for instance, a court of jurors, and you are the convict, and you are dressed in orange or yellow or blue, no, or green, you're likely to get a bad judgment from the jurors. However, this is proven science, by the way. It's a documented research. However, if you dress in blue, navy blue, like blue shirts with gray suits, blue shirts with black suits, you're likely to get a fairer judgment from the jurors than if you dressed otherwise. So the psychology with colors, just the same way we found out by psychology that orange is a very appealing color, generally speaking. And that's why, if you don't notice, you can check many stores in Nigeria that try to use orange as their brand colors. There's a reason behind it, and it's the psychology of colors. So in the same way, there's a psychology of the market that the market makers know. We don't have full coverage or full knowledge of it, but they know that if you make the price behave in a particular way, it will evoke certain reaction. So when people look at the price and the price is looking really bad, it evokes the sentiments and the emotions of pain and fear. Now, emotions of fear comes with a lot of misjudgments, because at that point, people are like, I don't want to lose my money. I don't want to lose my money. Or I don't want this money to go to zero. And people start making a rational decision based on that emotion of fear. And that's basically how market makers work. So when that saying says, be greedy and, be ready to buy, even if there's blood on the street and the blood is yours, what it's saying is you need to be ready to overrule your emotion and understand how the market works. Because if you don't buy when the market is red, then you really don't have anything to sell when the market becomes green and everybody is greedy. Having said that, I will run through this assessment of what's happening with Bitcoin before going to other news. I don't have too much news today, so we should be quick. First is that we are more than 10% below a floor price for the year. And the price of Bitcoin is still in big consolidation. Every time I keep forgetting to actually add, there's a chart I said I was going to add. That chart is the on-chain metrics for Bitcoin that sort of puts the price of Bitcoin versus the exchange availability, meaning how much is available on the exchanges. And I've said this for almost throughout last year that the balances are continually going lower every week. So what is happening is, as the prices are coming down, whales and institutions are buying Bitcoin and they are moving it off exchanges. So the prices are going lower. So real supply is actually going lower when you think about what is happening with the price of Bitcoin. And because of that, when the price is actually going to catch up with the real demand, it's going to be very drastic, because by that time, the disparity will be quite wide in terms of where the actual demand is versus how much Bitcoin is available. The reason I'm saying this is people think that whatever the prices are saying is actually an indication of supply and demand. No. And that's why I said I wanted to talk about production cost, cost price, and market price. And I think I should just do that now before getting to Crypto Pulse, Crypto Drip. Now, production cost is, like, how much it costs you to produce a particular commodity or a particular item. The price, which you can call sales price, is how much you are selling, that caters for your cost and that gives you a profitable margin. You can sell at cost, but there's a price that you sell at that doesn't make you fall into deficit or loss. And then there's the market price. Now, market price is dependent on a number of factors like third parties, brokers, and market players. Let's use an example of cocoa, what you call cocoa. The cocoa pods are bought from farmers in West Africa. Those farmers in West Africa, they probably sell at 10% margin in terms of their profits, or 5. I think it can't be more than 10 to 15% or 20%. Let's even say 50%, which I very much doubt. So those guys get the cocoa bought off them by the agents, quote unquote. The agents negotiate the price of the farmers, and then they fix the price to say, this is your production cost. So because this is your production cost, we give you 30% on top of your production cost. That gives you a 30% margin, and then we'll offtake all your inventory. And because this is a more amenable arrangement with the cocoa farmer, because they need assurance of stable demand, they agree to the deal, and usually the deal spans a long period of time. Now, when those guys collect the option, the farmers in West Africa, then they come to the they come to the arbitrage markets in the West, where you have a set of big companies and big buyers waiting to buy this cocoa. Between that time and the time the thing arrives in Europe, it might have done 5 to 10x, depending on how much price they bought it. And I'm talking, this is cocoa. This is not something out of the blue. This is something that's been happening for decades. By the time it gets here, let's say they bought it at £100 per metric ton. Just an example. I don't know what the cost is. No, metric ton is too. Let's say £1,000 per metric ton. Let's say £10,000 per metric ton is what they bought it at. By the time it gets to Europe, it could be going for anywhere between 50 and £100,000. Why? Because the price at which the middlemen are selling, basically depending on the end users' demand. If the demand is high, they can hike the price as much as they want to. And as long as the demand is coming, they keep selling. Now, that is the market or the open price. The market price, which is the price which is traded on open markets like, Chicago Mercantile Exchange, is purely speculation. It has nothing to do with the price of cocoa that's being sold on the ground in Europe. It might be close to it. It might be far from it. It might be the same as it, depending on the sentiment in the speculative markets. This is the same thing with crude. This is the same thing with stocks of different companies. And this is the same thing with every other commodity. So for instance, SpaceX or Tesla has not really been profitable as a company in the real sense. From a finance point of view, pure finance, they've not been profitable as a company since inception. What are they selling? Opium, as you call it in crypto. They're selling hope of a sustainable future, and they're getting carbon credits from the United States government to offset their losses. Most car manufacturers never break even until years after they've sold the model. The reason is that the cost of production is high, and the real profit they make is from spare parts of those cars, not really from the cars themselves. And the same thing has applied to electric car companies like Tesla. So whilst Tesla is not making profit on its papers, really, the stock shares of Tesla is going crazy. It's been going crazy for how many years now? Why? The market price in the speculative markets is actually different from the real cost of producing a Tesla and how much it is sold by, and how much real profits going to the company. And the same thing is happening with many of the companies on S&P 500. If you see S&P 500 going up, what has happened is the money they've gotten from quantitative, I don't want to call it quantitative easing, from the government's money printing in 2020, they've used it in share buyback. So they bought back their own share to create artificial scarcity. It's like burning, it's like what you call burning tokens in crypto. So they've created artificial scarcity by buying back their own shares. So the prices have gone up now. People think the companies are performing. No, they've just leveraged on the speculative market to increase their position in the market. The reason I'm bringing this up is you need to understand that Bitcoin is not any different. Now that Bitcoin has become an institutional grade asset, there is the cost of production of Bitcoin. Every 4 years, there's something called halving. People who are new. Halving is drop in production rate of Bitcoin. It's been programmatically engraved into the algorithm of Bitcoin. It cannot be changed. Every 4 years, the production drops by half. As the production drops by half, the production rate goes up by double, goes up by 100%. So 2019 was the last halving. Was it? No, so sorry, 2020. 2021 was the last. Yeah. So 2020 was the last halving. Yeah. So 2024 is the next one. Between now and when the last halving happened, initially when the last halving happened, Bitcoin was like 10K. Yeah, it was around 10K. When the halving happened, it dropped slightly below 10K before it started picking up again. By the end of that year, Bitcoin went from 10K back to all-time high of 20K, flipped 20K to about, I think, 26K, at which 2020 ended and we started 2021. So when that halving happens, what it means is that it's now more difficult to produce one Bitcoin. And the amount of Bitcoin that's produced with each block every 10 minutes on the blockchain has been reduced by half. Before 2020 May, block size reward or amount of Bitcoin produced every block was, I think, 12.5 or something like that. Now it's been reduced to 6.25. By the next halving in 2024, it will be reduced further to 3.1 something. So the more the block size reward drops, the more the cost of production of one Bitcoin increases. As of today, the cost of production of one Bitcoin is sitting at around 34,000 per one Bitcoin. As of today, that is not to add the cost of power. When you add the cost of power, then it becomes like 36,000 plus. So if Bitcoin were to drop to 36,000 plus today, just know that, or 35,000, just know that miners are going to stop selling, because what it means is that they are not profitable. But two things, as I said last year, two things are going to happen this year that will change the dynamic significantly. One is that, like we have seen from this Kazakhstan outage now, there will be Western companies that will approach those miners in Kazakhstan to offer them to migrate their mining rigs to places in North America, promising them, of course, better stability politically and more power. And because nuclear power is permitted in the US, it's way cheaper. They call it green power, but it's dangerous. If there's a meltdown, of course, there are consequences. But what will then happen? You have more migration of miners out of places like Kazakhstan that have held strong mining strongholds for a long period of time. What that means is that there will be more westernization of the mining of Bitcoin. And the more the westernization, the less likely Bitcoin miners have to sell their Bitcoin. So just please follow my line of thought. I'm not going to take your time, but I need you to understand these fundamentals and have it ingrained in your memory so that when people start talking that Bitcoin is going to zero, understand that this is one of the greatest invention of humanity. Just keep it at the back of your mind. That's what we're talking about is actually one of the greatest invention of humanity. And it's not going to zero. And the earlier you position yourself, the better off you are for you and your generations. Now, when miners no longer have to sell their Bitcoin, meaning they can use their Bitcoin as collateral for operational costs, what it means is that there will be no supply on exchanges. Bear in mind that exchanges get their supplies predominantly from medium-term whales and from miners. If miners are not selling, then there is no Bitcoin to sell. Now, if that trend continues, in which case venture capital companies are providing liquidity in terms of dollar to cover miners' costs, and they're using the Bitcoin as collateral, it's almost like you're having a binary fission of halving, because what it means is that, let's say there was the total supply or what Bitcoin miners are supposed to sell this year was, let's say 360,000 Bitcoins. And half of those has gone to Western miners who have approached the bank. Listen to that. Who have approached the bank to use their Bitcoin as collateral. Bearing in mind that people like Goldman Sachs and Coinbase are already positioned to offer Bitcoin as collaterals for loan. It's not that they are going to. It's already happened in 2021. They already have the services. So when they start approaching those people and saying, take our Bitcoin as collateral, give us dollar as operational cost funds, what is going to happen is a halving of halving in terms of Bitcoin. I don't know when it's going to reach the critical mass, but one thing I'm sure of is when it does, there will be some astronomical price increase. So whatever you're seeing today in the price of Bitcoin, not reflecting of the real fundamental dynamics. And that's why I've taken so much time, probably the last 10 minutes, trying to explain the, if you will, the supply chain of any commodity and, Bitcoin inclusive, so that you understand that whatever you're seeing in the price is just speculation. And speculation can go either way, depending on who has the market control at that point in time. Right now, the major banks have the market control because they have a lot of funds in futures exchanges like Chicago Mercantile Exchange and FTX that they can use to short the market and push the price down, regardless of the supply of Bitcoin. So when they push the price down and people who are on leverage position have to sell at a loss because of liquidation and stop loss, triggers additional losses and it pushes the price down further. So it's important to understand that whatever is happening in the speculative market doesn't really concern the true value of the underlying asset. And at one point or the other, the speculative market is going to reflect that value. So is Bitcoin going to zero? No. Simple answer. Is it going to 100K? Definitely. When is it going to 100K? I don't know. I thought it was going to 100K in November, but obviously the big banks had other ideas. I think we might suddenly find that 100K and just come down, just the same way it suddenly went to 69K and came down without making any noise. I think that's probably what's going to happen and take everybody unawares. But just understand that this is a good time to load up on the markets. I'm not promising that the price won't go 5 or 7K lower, but this is a good time to buy, because when you look back at January, you will think that, oh, that was actually a good time to buy. Just like in 2020, which year was Corona year? 2020, we looked back at March and said, oh, that was such a fantastic opportunity to get in on the market, because it was just at a discount. So moving on from that, clarify and clear the air. We'll have so much questions on it. So two things. I'm featuring two banks on the news today, and the reason I have is I just want you to understand how the banks play the market. So here's Goldman Sachs projecting Bitcoin is going to reach 100K 5 years. Think about that for a while. That Bitcoin is going to 100K in 5 years. So what they're saying is that there is no future for Bitcoin this year. That's actually what they're trying to say. However, you will find out in a few years to come that Goldman Sachs and their peers are actively buying Bitcoin spots right now, like very actively loading up now that everybody is afraid and selling. Why do I say so? In 2017, when the JP Morgan president came on air and said that Bitcoin is trash, that he sees any of his traders getting involved in Bitcoin, he's going to sack them, that it's a Ponzi scheme and all that. That same weekend, traders in London were buying Bitcoin spots in the hundreds of thousands in 2017. It's on record. It's not a hidden secret. So be careful when you see things on CNBC and Bloomberg, and you have this CEOs and speaking heads for the banks talking about what they think of the market, because what they think of the market is to make you evoke a particular sentiment, and that is what this news is talking about. Saying yes, Bitcoin can get to 100K, and the reason Bitcoin can get to 100K is if it takes up to 50% of the market share of gold. If you had gold for the last 2 years, you are sitting on a loss. For real, if you invested in gold for the last 2 years, you are sitting on a loss, because gold has actually been dropping. And the reason gold has been dropping since 2020, August, is because people, billionaires, hedge funds started moving their positions from gold into Bitcoin. That has not stopped. As a matter of fact, it's going to increase. There is a particular video clip I saw, but I couldn't download it. I can't remember where I saw it. It must have been on Twitter. The third richest man in Mexico, in his New Year's address or compliments of the season address, was saying, you should buy, that people should not believe in government money, that they should rather just buy crypto and buy Bitcoin. That because all government money, whether it's Mexican peso or the US dollar, is based on lies. And I laughed, because he was telling the truth. But I mean, for the man is already rich, he's very, very rich. For him to come out and openly say that, it means he's saying something that other people are not seeing. And it's just a matter of time. It's just a matter of time before people see it. And as I said at the beginning, it's not going to get better with these economic conditions. It's not going to get better, because it's almost like the world economy has been now put on a tailspin. A tailspin is a loss of control of the plane, in which the plane just continues to go in spirals till it eventually crashes. The world economy has been put on a tailspin, partly because of coronavirus, and partly because since that last financial crisis of 2008, we've not really recovered. What has just happened is that money print. And when COVID struck, the government just repeated the formula, copy and paste, just literally flooded the market with more money. So we are putting plaster on a festering wound and not treating the underlying infection. What is going to happen is full-blown, what they call in medicine, systemic infection or sepsis. And the whole body is going to catch problem. And that's actually what is going on. It's going on little by little. There was another clip I saw of the Venezuela dollar. It was on the refuse dump. Packs of it, like bundles of Venezuela. I didn't hear what the guy was saying because he was speaking in probably Portuguese, but I was like, this is supposed to be the money of the country. It was completely useless, as in it was on the streets, was littered, was littering the floor. So this is not going to change. Again, this is another bank. Oh, well, this is another job talking institution, Bloomberg, saying we think Ethereum outperform Bitcoin and Ethereum will outperform stocks in 2022. Bitcoin and Ethereum have always outperformed stocks year on year for the last 5 years. So this is nothing new. This is nothing different. Now, if you pound this news or this opinion versus what the bankers are saying, bankers are saying, it's Hail Mary. Everything is going to go to shit. So because of that, it's going to take a while for things to normalize. But what they're doing in the background is they're buying up for themselves and for their big customers. While this is happening, as I said earlier on, people in places like UK are going to get their tax increased in this coming or in this year because over 1 million people have been moved into upper taxation bands. Now, without increase in income, taxation is increasing, inflation is increasing. So even the wealth you think you have now, that you have in the bank, that wealth is automatically being depreciated because the government is not going to stop printing money. That is the only solution that governments have to solving the problems that we have right now. And the problems are not going to go away because the problem is deeper than the solution that's been applied. If I may put that word, let me put it that way. The problems are intrinsic problems. It's way deeper than the solution that the government. So the government is printing money, but that's not solving the problem. I was reading a post of somebody today, and the guy said that his builder ordered new doors for them to come and fit it. He said they've not been able to get someone to come and fit the door for 5 weeks. So they don't have enough people coming to take on jobs in the United States. That's how bad the situation is. So supply chains are seriously hampered. At the same time, there are no people to take off jobs because the wages are just too small. So what am I saying to you in essence? Be very circumspect with your allocation this year because whatever you're putting your money into that is not in crypto is going to depreciate, and it's going to depreciate really fast. It's not because I said it, it's just because of what it is. And the only saving grace for people against depreciation of fiat currency, to be honest, whether you put it in gold, it's not going to grow, by the way. If you put your money in gold, you're probably going to lose maybe 5% at the end of the year or 10%. But at least it's not going to lose 25% or 20% as you would have with fiat currencies. So what I'm saying to you is, if your portfolio has gone down, now is the time to do what is called DCA, dollar cost averaging or pound cost averaging, if you are in the UK. Meaning, if you bought Bitcoin at 50K and you had, let's say, 0.1 Bitcoin, which is 5K, that's about £4,000. Now that Bitcoin is 40K, it will be like 0.1 Bitcoin will be like £3,000. I think you should buy again because what it then means is that if you bought at 4,000, you bought at 3,000, let's say you bought 0.1, 0.1, you have 0.2 now at an average of what is at an average of my maths at an average of 3.5, yes. At an average of, so you've averaged to £35,000 as opposed to £40,000. So if you buy now at a lower price, you reduce the overall cost of your original Bitcoin. And if you bought lower than the current prices, there's nothing to worry about. If the price drops further, it just makes sense to buy. Because the prices are going to go up. When the Fed eventually hikes the interest rates, there'll be a shock on the equities markets. But that shock is usually short-lived, just like when we had when was that? in 2020, yeah, when we had the coronavirus shock and the price just went south. Now, initially, everything went crazy and nothing happened. It looked like Bitcoin was going to crash with the stock markets. After about 6 weeks, Bitcoin started bouncing up, bouncing up, bouncing up. Before you knew it, Bitcoin literally left the stock market in the dust. So right now, because of the tripping, you can see that the stocks of banks are going up and bank stock is rising because people are already factoring in that there will be a lot of movement to US treasuries and US dollar. But watch what will happen. Even if the S&P 500 crashes at the end of the quarter, watch what will happen a few weeks later. We will start to see a decoupling of the price of Bitcoin from the S&P 500. And that's when people will suddenly realize again that, actually, Bitcoin is a better storage of value and better assets than what we thought it was. And that's actually when you realize that the prices we are seeing today are on real discount. So just to go through quickly the market capitalization, yes, you can see that the Bitcoin dominance has largely remained the same during the week. Not during the week, actually, in the last 2 weeks. The market has had about 300 billion shaped off of it because these losses that the overall market cap is witnessing, those losses will be reflected in some institutional hedge funds tax reports. So they need to bank those losses to reduce their their exposure from a tax perspective to the government. And if they reduce their exposure, what it means is that they don't have to pay so much because they can claim that, this is how much we've lost in our trading or in our portfolio. So it's a normal thing. It's just that it's more apparent now that there are many institutions playing in the markets. Same thing with altcoins. That's why if you have altcoins, notice that your portfolio is not smiling. I'll just say keep calm and move on. It's not the end of the world. It's not. It's just for a while. Like I said, as long as it's not your rent money, your mortgage money that is sitting in there, there's nothing to worry about. This is a marathon. It's not a sprint. And understand that in the long run, you're always going to be guaranteed because year on year, Bitcoin has done more than any other asset class year on year for the past 3 or 4 years. So, in fact, if you span it over the last 10 years, it's done more on the average than any other asset class. So there's nothing to worry about. As a matter of fact, keeping your money in fiat is actually what you need to worry about. The prices of everything going up. I mean, everything. I don't know about you. When I go to shop and things that I used to buy for a pound, just find out that it's probably selling like. I'll give you an example. I got a laptop from to repair a laptop for someone, and when I went to the repair, I repair my laptops there usually. The guy told me that the laptop screen was what was that he would have told me to drop 35 pounds because or 50 pounds because that thing used to repair for 5 pounds before that. Now it's not even getting it at 60 pounds or 70 pounds. That he needs to charge me 85 pounds for it because everything is costly. Same thing with fuel. I mean, I don't know if you notice that the cost of even for I buy diesel, my car uses diesel, the cost of fuel has gone up, cost of vegetables has gone up. Everything has secretly, just almost like quietly, the price of everything has gone up. That's what's happening. And that inflation is not really being I talked about it's not really being captured by the economic metrics that many economists use to determine the productivity of a nation. Unfortunately, because if they capture it, everybody will go crazy that what are you guys doing? Like we are running double-digit inflation as Western countries, but they can't report that, of course, because there'll be chaos on the street. You want to ask for a market. So really, they have to use consumer pricing index, which is a localized window dressing scope of goods and services to calculate real inflation. I don't like to drag this because I'm not an economist. It's just common sense. Like I said, what you put in a quadratic equation will always even out because there is equality sign between them. So one has to even out the other. So the CPI provides that basket that allows them to juggle the figures in such a way that does not disturb the policy. Because if people actually see the real rate of inflation, they tell you nobody will spend. The economy will just collapse. The economy will just implode because nobody will spend. Because everybody's like, oh, things are too expensive. So having said that, the sentiment right now is extreme fear. Like I've said this for almost 2 years now. For people who have been doing protocols with that, the best buy signal is fear and greed index. When fear and greed index touches extreme fear, just know that it's time to buy. When it touches extreme greed, know that it's time to no matter how good the market looks, know that it's time to sell. It might not look nice, it might not look good at the time, but anytime see that the market is like extreme fear like we have it right now. And I mean, just for context, about 8 weeks ago, we're close to extreme, we're at extreme greed around 75, 78. And right now we're back to extreme fear. So that's where we are in the swing of the pendulum. This is the good opportunity to buy. Might be the lows of the year. These prices might be the lows of the year. In terms of where we are, I think we're at capitulation right now because everybody's afraid and people are thinking, what's going on? In the scheme of things, we're at capitulation on the overall side without getting to euphoria, actually, I must say. But as I said, we've not really exhausted the bull market. We've not exhausted the price. And as I explained last week, and I'm going to explain now, I hope I have, I was trying to change this. I'll use this one just it's too annotated, but just know that the light gray colors are representative of downward prices and ones light lilac are the downward prices and deep ones are up price action. So on a general term, not really had any significant upside in that December 1, November 9. November 9 was when the price hit 9,000. No, 10, 9,000 November and stopped. And since that time, really and truly, been in a downward. What I said before we went on Christmas that this dip that we had to 1,043, I expected the price to visit it. I remember saying that before we can see any upside, I think the price will visit it. And the analogy I gave, the boxing analogy, if you remember that, I said when boxers are trying to gauge how much the length of their power punch needs to be, they'll first throw jabs. Those jabs are just like fakes. They are throwing the jabs to gauge how much their reach is going to be before they actually throw the actual uppercut. So when they throw the jab gives them an idea of how far they have to reach. So once they throw the jab and they see what the distance is to gauge the opponent, then they throw the hook or they throw the uppercut. When they throw the uppercut, then it does the damage because then they know how much distance they have to apply power for. I don't want to go, it's physics really, but I don't want to go into that. But that's exactly what happens here. When you see this kind of wick down, it's almost like the market makers are testing for how much liquidity there is on the downside. And once they push this down on the 4th of December, it showed that 41,000 was where the lowest liquidity pool was sitting. And as a result, what will then happen is, even if the price bounces up, usually, characteristic of Bitcoin, price is eventually going to find that it down back to that same spot. So here it is. Today, we're back to that same spot. This is the daily chart. We're back to that same spot. It's deep below that spot now, and everybody is freaking out that, oh, now it's going to 35K. Now, what this has done is that it has convinced the people who have a bearish sentiment that they are right, that the market is going to crash. So at the close of today, many people will enter short position to short the price of Bitcoin, forgetting that, I'm going to show you, just in, it's not, it didn't only happen, it happened 3 times last year, actually. So if you look at September last year, again, you had that strong week down that pushed down the price from 52 to 2, essentially like a $10,000 and pushing down the price. When it tested those lows, market rebounded like not at that level. But what happened was the price revisited it, bounced up like it was going up, then came back again, revisited it, then dipped further down one more day before it started picking up again. Same thing happened again here in May last year. The May one was much more protracted because we were really like getting it free, and the prices were going as expected. But then when the market makers decided to shut the market, and it was little by little really until the 19th of May when we had that how many thousand now? Uh, that's crazy. That's about almost 14,000. That's almost 14,000 week down candle. So that candle is like the jab to test the depth. When that jab dropped, what happened was the market attempted to go up. It couldn't go up. It ranged for a while. Attempted to test that low. There were people that front ran it. Then they sucked in the bulls by this bear trap, bull trap, thinking that the market was going to go up. Then it down again, further down from the original jab. When he did that, that was the point at which I started shouting, this market is going to start. Because it didn't start going, it didn't yeah, almost like 2 weeks later. But at that point, I could see easily that what was happening was now that the market has dipped further, second dip, at this point, I was like, okay, yes, we're not going any further down. What then happened here was we attempted to go down as we went here, but we couldn't go further down, which meant sellers were exhausted on a longer time frame. And of course, what we then saw was the price went like, from 29K all the way to 3K that we saw in September. So understand that when market makers are shorting the price of Bitcoin, they are testing for liquidity levels, which means the level at which there is a lot of demand on the market. So that's I've shown you 3 examples actually, including the correct one. What I'm saying is, wherever this current dip ends, there's still going to be a relief rally, probably to either 46K or 50K. Then there'll be another attempt to push down the price. If at that point the price doesn't get below 41,000, then we have a confirmed uptrend for the year. If it gets below 41,000, then the price is going to range. But knowing that we're likely to have the conclusion of the bull market this year, I think we're going to get that rally. I don't know when, but I know that for sure we're going to get that rally this year. So that's that in terms of price of Bitcoin. Price of Ethereum is pretty much doing the same thing. Yeah, you can see this is 4-hour charts. It's already, this pink line is a liquidity pool. I usually draw those colored lines or those colored boxes or zones to identify areas where prices have we call it support and resistance. Prices where there are a lot of demand and supply, basically, but demand and supply, where there are a lot of demand to buy or to sell. If there's a lot of demand around this region, I see price, I see same execution price, I see the same around this price. I think that for now, we might see some bounce, from the price of Bitcoin in the short. So we do now bounce back. There will be another attempt to try to push down the price, probably tomorrow or Monday. Test whether we can get to 39K. If it's not successful, then the market will naturally rebound and go up. And as I usually say, technically inclined, that Bollinger Bands are standard interpretation of the price. Tell you when the price is extremely deviated to the bearish side of the side. Like this is right now, price is extremely deviated on the daily chart, which tells me that outside the gate, not a good time to sell. Naturally, it's perfect time to buy. Just the same way when the price touched this, anybody that bought it was in trouble. Was this top, local top? So in the same way, anybody that buys here definitely, because the price is usually oscillating. And in any established trend, even when it's going down, we still go back. Yeah. So naturally speaking, this does not make sense for anybody to sell. But again, market makers and the sentiment will make people sell their bags, only for them to go and buy it back when the market has started going up. Anyways, that's all out for me. I think I've spent all my time today. Yes. So for guys in London, we have a couple on the 2nd um, January. I have the ticket link is on my bio. If you are fast, I think there are about 20 free tickets for people who are going to attend physically. For people who are attending virtually, comes at a cost, very subsidized. Just by giving back to the community essentially, because it doesn't even cover the price of the pen. But if anybody is interested in crypto, you're a professional, you own your own business, I have some insights to share concerning positioning in this space for 2022 and beyond. So if you're interested, on the 2nd of January, here at the very Grand Connaught Rooms at Central London, it's close to Leicester Square and Holborn stations. So for people in London, a good time to check in. If you want to join online, of course, you have to pay. I have that. I think I posted it on the WhatsApp, the Eventbrite link. I posted it on the WhatsApp. I think it's also on my Instagram bio. I think it's on my Twitter bio as well. The link to the events. It promises to be a good time. There's a VIP event as well, where I will be shilling some low gem coins at a separate session. So if you do buy the VIP tickets, you will get a message from me on separate meeting. That will be a follow-up to the London Crypto Summit. But I encourage everybody in town to at least try to join. If you're not in town, you can also join online. It will be broadcasted, at least the general section will be broadcasted online on today. Promises to be a good time. And there promises to be a lot of solid takeaway from that session. Thank you, everyone. If you have a question, let's have it quickly before we call it a day. I think thanks. If you're on Zoom and you have a question, please unmute your mic. If you're on Instagram, you can just type in your question. I'll read it out and answer. Yeah, Mr. David, go ahead and unmute your mic.
Good evening, Doctor. Thank you. Happy New Year. Thank you for the presentation so far. We appreciate your research and time. Actually, the question I want to ask is about the LTC Hub. Does it have any contract, or are we still OD? As in,
yeah,
of when to sell off or expire or something like that. Then my second
no, it doesn't.
question,
It doesn't expire. We're still holding it.
Okay. My second question is about the NFT class that you promised that you are going to work on.
Yes, I will let you know about the class in the coming weeks. Okay. I've just been busy with preparing for this London Crypto Summit. So the idea with this Crypto Summit actually is that we'll do one in each quarter in different cities in the UK. Okay. So there's London.
So can we still go into the market now with the situation of the market?
This is the time to go
into our hot point. So just some of us that have entered USDT. For some of our positions USDT.
This is the time to go into the market, in my opinion. And I don't know when you joined, but I did say that in earlier part of the call, I was trying to give you an assessment of the actual true cost of producing one Bitcoin as of today. We are
Yeah.
just about you are on the call then, right?
Yes.
Well, we're about $5,000 from the real cost of Bitcoin. So think about that for a second. So if Bitcoin goes to 35K, it means that miners are selling at cost price, which is not sustainable.
It's not.
Exactly. There's no point selling at cost price when you have institutions that are ready to borrow you money for your Bitcoin. So I know many people didn't understand my long analysis, but that's the long and short of it. Miners' cost producing Bitcoin is sitting at around 35, 36K. So if Bitcoin gets to that price, they will be selling at a loss. And it costs a lot of money to produce Bitcoin.
So for people like us, for retailer like us, can we have people that will borrow us for our small Bitcoin?
Yes, you have people like just to give you one example, you have people like Nexo that provide such services. But it's one of those things that I plan to explain to people during the bootcamp as well. There are evolving alternate financial infrastructures that are coming out from this cryptoverse, quote unquote, and people are not aware of it. So you keep your money in the bank. In the UK, you get 0.0, is it 0.01 or it's even worse? I don't remember. I've not kept my money in the bank for a long while. You can't get up to 1% essentially on your money for a year.
I've been using Nezo. I've been enjoying the dividends on Nezo. I'm just asking just to know if there are other.
There are other providers, but Nexo is a good one and they've been around for a while. There are other providers on different exchanges as well. That if you do have Bitcoin and the prices hit a reversal. So a good example, let's use Binance. If you have Bitcoin on Binance and we have a confirmed reversal, what do I mean by a confirmed reversal? Confirmed reversal is that you have like a 1 day $10,000 candle to the up, meaning the price suddenly gained 10,000 in a single day, whilst it was at the edge of the market, like I was showing on the chart. That is a strong reversal. If that happens and another strong candle follows it, you know that everybody will run off and start buying again. If at the bottom of that, you use your Bitcoin.
I'm very hungry.
Some people are talking in the background, sorry. If you buy at that point in time by how do I put it? Using your Bitcoin as collateral to buy, let's say, Ethereum or Litecoin or Luna. And then the day the price goes to a new high, you decide to sell. You'll have made, let's say the collateral was 5,000 and you borrowed 5,000. You'll have made probably 100% or more just on your Bitcoin collateral. That's just one example. And I decided to give that example because I know you're already vast in crypto, but there are too many opportunities that are available because of this evolution of digital assets. And it's important. And because most people on this call either have their own business or they have their jobs, I think it's something that I think we can leverage on to not only increase our net worth, but prepare for the generations of born and increase our wealth as a whole.
Okay, thank you, sir.
Dr. Lalo, you had your hand up.
Yeah, thank you very much. So I'm just thinking critically now. If the cost of producing Bitcoin is as high as $30-something thousand, and I'm just thinking critically now, and it looks funny. Won't the miners run away or the developers and abandon that? This work may not be, I mean, it's probably not worthwhile again. When you are working and you can't make significant profits. So I'm just thinking, is it compulsory for them to remain, I mean, mining it, or
Okay.
Who they go to
It's-
another?
job. So why do you abandon what you are doing? You're a doctor now. Sorry for my brutal interruption. I'm very sorry, please.
Doctor, okay, let me explain what Dr. Valerie just said. What he said was that, okay, so Chinelo, I'll answer your question. Let me answer this, Dr. Valerie's question. What he said was that since I was given an idea of what the cost of production of Bitcoin is, that once the miners get discouraged, if the price starts going lower than their cost of production, there is something called sunk costs in business. In business, could they talk about production costs, sunk costs, output costs, and input costs? Mining is an extremely capital intensive project. It takes almost 12 months to set up a proper mining rig. A proper mining rig will have at least maybe like 50 or 100 mining machines sitting in it. So it takes months to set it up, because once you set up the hardware, you buy the hardware, get it to a power source, set up the hardware. Then when you connect the hardware to the net, you need to, or to go to the blockchain, Bitcoin blockchain, you need to upload data from the genesis, meaning all the transactions that have been from beginning of the blockchain, it needs to be replicated into your miners before you can start doing anything serious. So for most people, it takes months for the mining rig from the inception of the project to actual run. It takes almost a year for many people. So it's an extremely capital intensive project. It's not something you can run away from just because the price dipped below your production cost. To be in perspective, the price has, there have been only 3 times in the history of Bitcoin that the price has gone below the cost of production of Bitcoin. And none of it, okay, apart from the Corona bit, none of it was, the other ones were not before institutions started getting in. Institutions getting involved means that there are institutions that hold in positions at certain level. So I'll give you an example. Tesla bought at 20s, 27, 29. MicroStrategy started buying way before them, but the bulk of MicroStrategy's purchase is sitting at an average of, I think, 29 or 32K now. When they get to those levels, those guys will start buying again. And if you keep that against the backdrop of the fact that there's really no Bitcoin, the Bitcoin supply is depleting every week on the exchanges. People are buying Bitcoin and taking it off the exchanges. So there is actually low liquidity for Bitcoin. So the miners are just going to wait. They're not going to go away, because 2 things. The reason why the miners are not going to quit is they already have enough invested capital in the project. So they can't just shut down the rig and say, this thing is not making us money anymore. It's not like, something that you can just turn off like a computer. No, it's like building a bridge and then saying that I'm not using the bridge again because I can't collect toll, or the toll I'm collecting is not enough. You wait. Yeah. You will wait till the price of the toll becomes enough for you to, break even before walking away.
Why are you reminding me of Lekki Toll Gate now?
I'm sorry, but I just needed to give an analogy of why mining is not small. It's a very capital intensive project. So before miners embark on it, it's huge capex that even in their finance books, when they write it on their balance sheets, the depreciation of the mining rig, they probably depreciate over 15 to 20 years. So they're still recording the original cost of that investment for years on their books, because it's a very capital intensive investment and it is the core of the business. So rather than saying that we are going away and we're not mining anymore because the cost of Bitcoin is below our production price, what they will do is what I've explained. They will approach Western venture capitalists and Western investors, give us money. Those ones can say, before we give you money, you have to move your rigs to our location. And then we need to rebalance the sharing formula, which is exactly what happened with China last year. some of, in fact, like 30% of the guys that left Chinese mining sites moved into the West, moved into places like Texas and Florida, where you had extensive mining infrastructure already waiting for them. So if I had a mining rig, think about it, I had a mining rig, I spent, let's say, $100 million, and now my mining rig is not producing, the cost of Bitcoin or the price of Bitcoin is lower than my production rate. I will go and look for capital because I know that this thing is a pot of gold. All I just need is capital to run for the short term till it starts producing profit again. So whoever comes with that capital will partake of, bounty when the price rebounds. So the miners are not going to be, and that's why I was saying that when that eventually gets to a critical point, it's almost like you'll be having a binary fission of halving, because what it then means that there will be no Bitcoin to sell at all on the exchanges from miners. So it will only be the ones that are available on the exchange, and the price will just keep going crazy. So I hope I hope that explains.
I just saw £3.50 and I use it to buy Bitcoin now.
So somebody said, what's happened? So in March, the Federal Reserve Bank saying they're going to review the interest rates. So just to explain in simple terms, interest rate is how much the government collects in terms of rates from banks that lend, and as a result, determines how much banks collect when they lend people money. It has a lot of implication on the economy and on the dynamics of prices in the equities market, because what it means is that once interest rates go up slightly, people move into what you call low risk assets or risk averse portfolio, like US bond, treasury bills, 5-year bond, 10-year bond. The reason is that if people have, there are institutions that have very large amounts of capital, dollarized capital, that they're just looking for something to give them, simple yield, not even more than the real hurdle rate, but at least more than the CPI rate that's being printed every month. So when the US government increased the rate, of course, it makes things more expensive to exporters in the US, but it also makes the dollar more attractive. As a result, people tend to gravitate towards the dollar for that period of time. Now, this affects equities market because people start selling their stocks, get into US bonds or treasury bills. And as a result, equities market take a shock. The stock market, and by extension, crypto market. But what I was saying was that when that happens, usually what happens is there's a drag down in which all the markets fall. And after a while, you start to see that the price of Bitcoin starts decoupling itself from the S&P 500 and the equities market, because people eventually realize that, okay, Bitcoin is limited in its own supply. So it's eventually going to outperform the market. So the funds start gravitating back into Bitcoin. So even if we do have, a drop, which is very likely, I think by March to already be priced in on the prices of the equities market. And to be honest, there is no guarantee that the Fed will increase the rates, even though they have said they're going to increase the rates in March. Just the same way they said they were going to increase the rates at the end of Q3 last year. They can decide to kick the can further down the road, meaning money printer has resumed operation. And of course, the market will go ballistic. That's the case. But everybody says, okay, Fed's going to increase the rates. But if they increase the rates, that's what's going to happen. People will move into dollar-based assets. Equities will suffer the shock. Because equities suffer the shock, the prices will crash. Companies that have profited from their own shares being ballooned for a while and done share buyback will have the opportunity to do more share buyback. It's all a technical game if you really understand what's going on, especially for public equity.
They false hope that they are raising, because as much as they have been saying that they will increase the rates all this time that I've known, it has not increased by maybe by 0.01 or whatever. And if it is 0.01, they raise it to 0.015. What was the meaning of that?
So it's just the hype. And
yeah, exactly.
It's just like when you say in crypto, when you say buy the announcement, buy the test net, sell the main net. Meaning when they say, okay, we are working on our test nets, they promise a lot of things of solution is going to do. That's the time to buy. Once they say now the product is ready, that's the time to sell because the hype is all gone. So as much as possible, the Fed is working in the interest of the Fed. We can't go into discussion of who owns the Fed, but the Fed is working in the interest of the Fed. And as much as possible, their interest is to make the dollar as attractive as possible, whilst solving the political problems in the United States and the money print. Now, I'm not saying that they are bad or they are bad actors by printing money. I'm just saying that the printing money is not in the interest of the common man because it depreciates your wealth over time. So, for a very good example I used to give is, if at the beginning of 2020, before coronavirus, you had $100K in dollars in your bank account in the United States, I'm telling you that by beginning of this year, that 100K, frankly speaking, is worth less than 80,000, be around 70-something thousand, really in true purchasing power. And it's not, I didn't pull the figures out of the wood. There's this index that used to be available on the Fed's website called M1 and M2. M1 is the real amount of money between March 20, when was Corona? March 2020 and March 2021, almost 1/4 of the overall circulating supply of dollars was printed. So think about it. The dollar got a 25% dilution in less than 18 months. From inception, I'm not talking, the total amount of dollars that have been printed from the inception of the dollars as the US currency till that time was diluted by 25%. That dilution is not coming out of thin air, it's out of money, that dilution. So what has essentially happened is everybody that has wealth dollars, including all the developing countries like Nigeria that collecting their oil revenue in dollars, everybody has become poorer by almost 1/4 of their natural wealth.
They have become better.
So that's why the money printing is bad. And I mean, the government don't have any other option unless you want to have an Armageddon or the Great Depression where everything will crash and they will need to do a rebasement. So there are two. Just let me branch on that rebasement. There are two schools of thought. There is a school of thought from some unelected guys in Europe called World Economic Forum that they provide unsolicited policies and advice to governments. And they find a way of making sure that their predictions come true so that governments increasingly depend on them for counsel and for direction. To give you context, in 2019, at the beginning of 2019, the World Economic Forum ran a scenario in which we have a global pandemic and then gave the possible fallout of that scenario. That was Q2 2019, Q1, Q2 2019. By 2019 December, COVID struck in China. So you run a simulation and less than 12 months after, that simulation comes true. Don't ask me how it came true, I don't know, but think about that. So these are the same guys that have as their mission that the world needs to rebase overall currency and exchange of value, that we need to rebase a sort of a common currency between countries. So that they call it the Great Reset. You can go to World Economic Forum sites. You can read all. They have very crazy ideas there. But these are the guys that advise most of the Western government. And that school of thought believes that you need to rebase the global economy to solve the problem. Another school of thought sits more with the economists to say we can create money out of debt, or create debt-based money and use it to stimulate the factors of production and increase productivity, and by extension, increase the wealth of the people. There is no right and there's no wrong answer. You listen to both sides of the divide. But the truth is, the common man becomes poorer for it. And that's why I'm doing this, because people need to know that The government will work in the interest of the government. The businesses will work in the interest of the businesses. Everybody is seeking out their own interests and doing what they think is best for themselves. So you need to watch out for yourself as well. Just the same way nobody taught us in school about how to manage our money and how to become wealthy. Nobody's going to teach you that, you know, our wealth is being depreciated on a yearly basis by governments. I'm going to stop there before I start my rant. Anyway, is there any other question before we close? I see. Thanks for joining. If there's no other question, I'm happy to let you go. I've actually extended by more than almost 20 minutes now. Mr. Wali, do you have a question?
Not any question per se, just to appreciate you guys for the work that you are doing and for allowing my side comments, which Dr. Laliri never welcome anyway. So sorry for my interruption.
Why will I welcome it? You
Yeah.
didn't send anything for Christmas.
No, when you almost send the talkie to you.
All right, guys. Thank you very much and have a lovely weekend.
Thank you so much.
See you next.
Thank you. Thank you.
Thank you very much.
Thank
Welcome.
you.
Cheers.